You're watching Famous Dave. On YouTube.
All right, folks, welcome to the show after another day in the markets. Look, that was the like most like grinding, annoying, like just frustrating like market ever. And you know, I'm making money now. Like I'm short vol and was making money today, but yeah, it just felt like like I'm being dragged through gravel or something like that. It's just not fun out there. You know, you get a little rally and then like I was watching the E-minis trading and you know, you get a little rally and then all of a sudden like people are selling it like 5-6 points through the they're offering it like 5-6 points through the offer every single rally. And it's just like where do all these people come just to sell more and more and more stuff? The politicians can't seem to get it together, I guess. We thought we were going to probably have a deal today, and we probably still are, but just really frustrating out there. You know, I'm short volatility along the market, and I can only imagine, like I said, how people feel who are like long TVIX and UVXY. But, you know, I mean, let's take a look at the VIX chart here. And, people are asking me to explain to them privately, like, what is going on with TVIX and all this stuff and why are these things going down. So let's take a look at the VIX chart here. And, I think that we've seen the spread widen between spot and the futures. We've seen the futures just like nobody wants to buy VIX futures right now. They're racing lower, way ahead of the VIX, and I think that just speaks to the fact that the market is considering this deal to be a done deal on some level. Like some deal is going to go through this week on some level. They're just working out the details, and I think that is. You know, regardless of what the market does from that takes some uncertainty out of things. And we were anticipating the numbers to explode for, new cases, and they have. So I think some of the uncertainty is coming out of the marketplace here. For a while, it was like just this impending doom where like cases in the U.S. hadn't really gone up, but we knew it was coming. Now that it's kind of here, it's less of a, an impending doom thing, I think. And, you know, when we look at this VIX chart here, it kind of seems like we have reached the peak, you know, and we're coming down the other side of the mountain. Now, we certainly could make new highs, but it feels real heavy here. Obviously, that's easy to say now that the market's way down. With the market down, you know, E-minis, of course, the NASDAQ up on the day here, but E-minis we're feeling heavy all day and like down 2%. We saw the VIX futures just getting crushed, destroyed. And all these products, you know, VXX down 9, TVIX down $197. It breaks the 400 level after the close here. But just really frustrating illiquid markets out there to trade. You know, I was looking at my Darden this morning, and you know I'm long it. Before the open, it was bid up, and someone just came in and just hammered it. I mean, it was like 42 bid, and someone came and just sold like 10 lots were trading in stock, and someone came in and sold like 8,000 shares on the bid, and then they took it down $1. They sold another 5,000 shares on the bid. So a lot of illiquidity out here. Stuff's getting hammered. I would be really careful, folks. But, you know, this is what I was looking for a while, was like the fact that volatility couldn't stay up really high. I was looking for like last week for vol to start slumping if we didn't have these maximum down days. And it's taken a little while, but now it appears that they're taking it down. It's not able to sustain that level of vol. And I would suspect that we have option sellers in here now looking for this market to turn a corner. We saw the VVIX was down, I think, 21 at one point today, and just just getting hammered. The VIX, however, market's down, and the VIX was like not really going up. It stayed like sideways. Even with E-minis down like 80 points, VIX was not going up, and the futures were just getting hammered. I mean, this is a really strange times when we see the futures and what's happened to them today. If I kind of highlight that section of my screen here, let's see if I can do that even. Hold on, I lock something. Oh, here we go. You're going to see just the futures just getting hammered. April futures down 12. And, the spread between, it's like they don't care if the VIX is staying up here. As far as the futures are concerned, this deal is already done and the market's moving on. This stuff just getting destroyed. And I think that this is real in the sense that there is pressure on the downside on volatility here. I think this Fed stuff this morning, with them saying like they're going to have unlimited, they're going to help the government, or they're going to help us in an unlimited way. And the other big thing about the Fed announcement this morning was they're not just going to do government bonds, they're going to do corporate bonds too. So that was a big deal because the corporate bond market has been, treading water for a while now. But we saw the corporate bond fund pop this morning on that news. And really, the Fed really has stepped up and tried to rescue the markets here. I think we have to give the Fed credit for doing that. And I'm pulling up the name of this particular bond fund. Is I think it's like LQ something or other. Hold on. LQD. So let's look at LQD. So LQD is corporate bonds, and this is the Fed has never helped with corporate bonds from what I read before, but they're going to jump into the corporate bond market. And if I get out of the way here, we can see that this made a big move up, this corporate bond fund here, LQD. It went from 104 to 114. It's kind of off the screen here. Let me fix that. I need multiple adjusted screens so I don't have to do this in live time. Anyway, corporate bonds up. The corporate bond fund up in value, so that's good. TVIX just getting schmundered. Look, I said it before. Spencer, in the chat, is saying it there as well. TVIX could never come back to where it is. So don't hang out and just let your money dissolve if you're long it. Take the loss, get out, move on. It's like I was comparing it to a rubber band. You pull this rubber band really tight, and when TVIX goes flying up to 1,000, it's like this rubber band that's pulled super tight, and it's going to snap back down. And that's what's happened, is it's just snapped back down. I go on YouTube and I see all of these channels that are supposed stock market channels, and some, most of them have better graphics than here, and it's a cool place to hang out with the guys trading and stuff. But these people, I was watching a couple of them. It's totally irresponsible. Them telling people oh yeah, get on the TVIX train. This is the way. We were long. We came in long. I love when these guys, they say what everybody that's following them is supposed to do, and how they made all this money yesterday, this kind of thing. But I just think a lot of these stock market sites are irresponsible, and they've highlighted TVIX, and they've kind of talked people into playing it. And now there is a huge generation of TVIX bag holders, and I don't want to mock people. It's no fun losing money, and it's very easy to jump into something new and lose money. And so we've all done that kind of thing before, but it's frustrating to me because my whole raison d'etre or whatever it has been to kind of educate people on this stuff. And I've just got so many people coming to me and saying look, I'm long TVIX, I'm long UVXY, and the market's down today. Why isn't this moving higher? And the thing is if you're buying TVIX and paying even $500, it's as if you it's as if you bought TVIX like, in 2018, right after the Volmageddon, and all that decay that's happened has still happened, and yet you're still long TVIX up here. So this stuff is coming back to Earth. It was bound not to stay up there forever. Just because we had a big reversal in 2008 doesn't mean that we're going to make new highs in the VIX this time. Nobody knows what's going to happen. I would still argue to you that until the VIX can sustain below 50, we don't know what's going to happen. This stuff could all turn around and the VIX could go right back up. But there's been a strong case made today for the fact that that was the top. The futures are just getting hammered and destroyed. And plus VVIX is down. Now VVIX is still pretty high. If we look at that, 167 is still in the stratosphere. So that doesn't signal that stuff is over. And the market has gone down. We kind of barely held. It was funny though. Last night, you guys, we came on, and I'm saying we. What I mean by we is whoever was hanging out with me last night. You got to always say that on a Sunday, that it doesn't mean that much what happens on a Sunday night. It's just very illiquid, and it's like a totally different day. And so that turned out to be true this morning. We saw the stuff come off the lockdown. And if you went on Twitter last night, all these people were saying, oh, yeah, it's locked down until tomorrow morning. Well, we came off the lockdown, and we had a good fighting chance of being up on the day. The NASDAQ was up on the day. So a huge range today, however. But I think that this is a positive thing in that we're getting some sideways action, and we can maybe break the downtrend. If we look at the E-minis, it's still, look at that chart. I mean, it's still a downtrend here. We haven't had enough time, distance, or move to say that we're not still in a downtrend as far as I'm concerned. If you look at it from there, now if we close up a little bit, maybe it looks a little different, but still, does that look like it's over and we're in an uptrend? It doesn't to me. And when I'm looking at the market, I want to be looking at the SPX, which is what this represents, because that is where all the money goes through. And so regardless of whatever other indicators there are, that's what the SPX looks like right now. And so this is not over. We might have reached the height of vol, though. I mean, if we just kind of dead cat bounce and stay in the range between 2,000 and 2,300 for the next year, then vol will continue to come in. I mean, a VIX a 50 VIX is still a very high VIX. And we haven't even gotten there yet. So let's not get ahead of ourselves. It's so frustrating to me. I guess a lot of people are getting sick of being cooped up. Are you guys sick of being cooped up? My dad's sick of being cooped up, and it's only been 2 days. You know what we have to think of is that our parents, VVIX is the volatility of the options on VIX futures. So if you look at the VIX, if you type VIX in and look at options, that's going to be the SIBO VIX options. And if we look at order flow in the SIBO VIX options, now this is only showing put trade, so that's not going to be totally accurate. This is going to tell us the big trades that happened today, and you see size trade in this all the time, and it's definitely not surprising to see size trade in this, but what I like to do is look at time and sales, and I sort it by big trades. And you can't see if these are calls or puts either, but we see 12,000 calls in June sold, 10,000 puts bought, more put buyers. But stuff has come in. When the option prices go higher in the VIX, the VVIX goes up. When option prices go down, VVIX goes down. It's still very high. 167 is still very high. Somebody was tweeting to me the other day how we were higher than in the Volmageddon, and certainly we were for a while, and we've been high for a while here. Look how high we are in this. I mean, we're just kind of in the middle of a spike for VVIX here, so definitely not out of the water as far as that's concerned. But yeah, just a really frustrating day all the way around for trading. Okay, Oliver, Oliver Rios. Okay, so Oliver Rios gets a star if Edward, if you can give Oliver a star if you're there, because he invited me to his company thing and we made a video, which was awesome. I have brought it at, so stay with me for 1 sec, Oliver. Shetty President, I like your name. I'm sorry, I'm nonpartisan. I don't like your name. I'm indifferent to your name. You paid $7.99.65. Should I average out? My recommendation to people, if you're long this stuff and it's not working for you, I would sell half. I would do something as soon as you can. Okay, and I'm gonna get back to you, Oliver, in just a second, but let's talk about, can we explain why TVIX did not go up today even though we went down? Yeah, let's do that. I'm going to do that again for you. Essentially, TVIX was already at a very high extreme level. That's what took it. TVIX has gone from 38 to 1,000. Okay, so it's already at a very extreme level. Now, what TVIX represents is TVIX is represented by the April VIX futures, but it also, you can think of it as when you buy TVIX, you're buying options in the SPX. Now, new people might not even know what that means, but essentially what it means is that you are making a bet when you buy TVIX that stuff is going to stay very, very volatile. So as time goes by, if we don't, remember last week when we were like limit down, limit down, limit down? Well, if we don't stay in a situation where we're making limit down, where we're moving 5 or 7% per day, then volatility cannot stay where it is. So the problem with buying TVIX in the last week was that it was at a very, very high level. So even with it going down like it did today a lot, it is still at a very high level, and it's very hard for it to stay up at that high level. During normal times, we would expect this stuff to come in pretty quickly. If we look at a chart of the VIX once again, it seems like we have reached the peak of the VIX, and there's pressure for it to come down lower. So if we look at the VIX here over a year chart, this is what it looks like. And it looks like we've reached the top, and there's pressure for it to come down. Now, for the VIX to get back to normal, it's got to come all the way back down, I'd say around 30 at least. And we're up around 60. So there's people now who are trying to time it. There's big companies that are trying to sell volatility because they know it's going to come back down at some point. So there's a lot of people out there trying to sell volatility. TVIX is based mostly on the April VIX future. It's this one here, /VXJ20, April VIX future. April VIX future is down 11.92 today. It's also based about a third on the May VIX future, which is down 11.56 today. So the short explanation is TVIX is down because the VIX futures are down. Now, why are the VIX futures down? Well, that's kind of a question for a debate, because the VIX itself is only down 4 and change, but the VIX futures are down 11. So my speculation is that the market feels like this deal that they're working on, and U.S. Congress is working on a deal to bail out, to help the public, and it's a huge deal. And there's some areas of contention, like how do you do it if you're going to hand out money to people, if you're going to send them checks? Who do you help the most? How do you help companies in a responsible way? And as usual, the two parties are at each other's throats about this, and it hasn't gotten decided yet. But in the meantime, the Fed, which is another part of the U.S. government which can help out things, did some very helpful actions this morning. They announced that they're going to continue to support the markets. They said they're not even putting a number on it. They're saying it's unlimited amount they might help the markets. And they're going to start helping corporate debt. So corporate bonds they're going to start buying. So these two actions have reassured the market, and that's reflected in the VIX futures going down. So a perfect storm of things creates the fact that regardless of which way the market went today, volatility came in. Now, usually volatility is tied to the way the market goes. Usually, if the market goes up, the VIX goes down. If the market goes down, the VIX goes up. But that doesn't always happen. It can be, and we're in a situation right now where the VIX is so high, and it's been so high and so extended that it doesn't take much for it to go lower. And so we've seen a big move today in the futures. And that's as well as I can really explain it. I know it's frustrating to people trading TVIX and UVXY. And it doesn't help for me to say, "Oh, I told you so," and blah blah blah. If you look at the video that I made yesterday, I was saying to people, look, the only way that TVIX can go higher is if we go down very violently. And you should know that now. It's true from this point on as well. The only way TVIX can go higher is if we move down violently. If we stay sideways, today, you could call today being pretty much sideways because the NASDAQ was up with the Dow down. So we're down to sideways today, but it wasn't super violent because we're off the lows of last night. So TVIX is a dangerous thing to buy. I'll continue to say that people who are trading the VIX know that. Professional traders are not buying TVIX. I can guarantee you. So if you got caught on this, this is your price of admission to learn about the stock market. You got caught, and my advice would be to do something. Don't just stand there and watch it take all your money away. Do something about it. If you've got 10 shares, I would recommend selling 5 and then reevaluate. I had people ask me about this last night, and I said, well, you might get a chance tomorrow to sell it out. That's when, TVIX was, $200 higher. But don't just let this pass you by because TVIX could go right back to 200 tomorrow and never come back to where it was. It's perfectly likely that could happen. I mean, I wouldn't say it's like, the odds on that it's going to go down $200 tomorrow, but I would say that there's certainly a chance that this is the last time it sees 400. We don't know what's going to happen in the future, and certainly you might get a chance to get out of it, but hopefully, you learn a lesson, you can get out of it. And like I said, we all lose money trading. It's not like if you're new, don't feel like there's these smart traders out there who know what's going on and they never lose money, and that only new people are losing money. Everybody loses money trading. It's a tough game. The smartest minds in the world are competing with each other. Everybody probably has more information than you and I do. So don't beat yourself up about it. Take it as a lesson and move on. We got to just take those bad trades, close them out, and move on. There'll be other opportunities out there. The key is just to stay in business. But yeah, really frustrating day. Let's get back to the chat here for a second. Does that answer some questions? Hopefully. Yeah, exactly. It's it's the hardest thing when you lose money to just move on. But I've gone through sitting there and just beating myself up over stuff. Certainly. But it's water. It's water over the dam. It really is. If one of the hardest parts about trading is dealing with losing and dealing with the emotion of it. You can get past that. Obviously, you should care about what happens with your money, but over time, you can get past some of this stuff. I can't beat myself up over stuff. If you try to make the best decision, you made the best decision you could with the information you had, and it just didn't work out, and here you go. Yeah, the key is to trade another day. I appreciate all the new faces in here, by the way. Thanks. for coming on. Let's see. It says somebody's razzing me here. It says they feel like I should be embarrassed about. Hold on. Let's take a look at this. This guy says, I feel you should be embarrassed by this statement, but you haven't deleted it yet. So let's see what I said that was so embarrassing. I'm going to humiliate myself in front of the audience here. Let's see what I did. It's hard sometimes on it's hard on Twitter to find like which message they're talking about sometimes. I don't know which message it is. Let's see. What does this guy say? He said, he feels like I feel you should be embarrassed by the statement, but you haven't deleted it yet. So, Monocle Man. Oh, I'm not embarrassed by the statement. No, this was yesterday. They were talking about how, like, this guy said that, I know what it is. This guy said that hedge funds were only down 11% versus the rest of the market that was down way more, and that hedge funds should be investigated because they haven't lost as much money as the rest of us have. So he's not talking about me. This guy's not talking to me specifically, but this guy was, the guy was saying, well, because hedge funds only lost 14% instead of as much as the rest of us, that they should be investigated, which is ridiculous. Here we go. Monocle Man. Anyways, I'll cue that up later so we can look at it. I don't want to waste any more of your time on it, but I thought they were criticizing me, but I guess they're criticizing someone else. So I got a really nice person did a big Patreon thing yesterday. Michael Andreas, Dave, you're the man listening to you for 4 years. Very quiet. Thank you. That's very nice of you, Michael. I appreciate folks who are like long-term listeners but never say anything. If you want to help out, just leave a comment in a video somewhere. That helps out because it helps it makes them move the video up on YouTube. So let's see. So it's better to buy 2 VXX puts in the money right now and wait, or buy farther out and get like 65 contracts, says Ryan Waters. Well, of course, if you buy out of the money puts, you can get a lot more out of the money puts than in the money puts, but it's all a question of odds. Obviously, you could make more money by buying a whole bunch of puts at a cheap price if the thing goes all the way down there. But, strike selection and how far you're going to go out in VXX is really important. So let's forget about today for a second. Let's just talk about moving forward. What do we want to be looking for, and what do we want to be doing moving forward? And is it right now? Is it too late to short volatility? Is it a smart thing to come in and like short UVXY somehow, or short VXX with these products down $9 today? Is it a good time to do that, do you think? Or is that FOMO? Is that fear of missing out and you're too late to jump on the ship for shorting volatility? Or is this a time now to get long? Now that TVIX and UVXY have gotten crushed, TVIX now 360, UVXY 63, is this the time to jump on and get long some volatility? Well, that, you might be surprised by my answer, but my answer would probably be with stuff way down today. Now, I never get long volatility. I'm either short or I'm out, but this is, if you're thinking about shorting volatility, it's probably not the best moment to do it because we had a big down move today. If you want to get into a short volatility, the good time to do it is wait until we have another big down day and this stuff pops up. This isn't the last day that these products are ever going up. I personally have been short VXX, and my idea of a trade to have on for a long time is some trade short VXX by doing a put spread. I don't know if you guys all of you guys don't know what a put spread is, but basically a put spread is buying one put option and selling another. It's a limited risk trade where you say you pay a little bit to make a little bit. So let me just give an example of the kind of trade to short volatility I would pick right now. But like I said, this might not be the best moment to short volatility. If you're into getting long vol, this might be a better time to get long vol because we just had a big down move in volatility. Now, my forecast is that we continue to move lower in vol, but other people are going to have different forecasts, of course. But yeah, to look at a trade that I would be interested in looking at is something like going out a few months and buying a put spread. So for example, somebody was asking about buying some in the money puts. I'm not a huge fan of that because even if you pick an in the money put, like look here, if I pick the 60 put in September, that put's got premium in it. If you look over to the call, that call value is how much fluff this put has in it right now. Right, so if you do the math, this put has $12 of extra premium in it right now. So if you buy this put, it's got to go down $12 really before you even start making money on it. So I don't like that idea because I like to do spreads, and the reason I like to do spreads is when you buy a spread, one option's price offsets the other option's price. So if you're in the same month and you're buying one option and selling another, like for example in September here, if I were to say buy the 40 put and sell the 35 put, so we're on Thinkorswim, I'm clicking on the offer of the put, I'm holding control, clicking on the bid of the other put. So if I were to look to buy this 35-40 put spread, so the most it can be worth, it's the 35-40 put spread. So if you subtract these two numbers from each other, you get $5. So the most this can be worth is $5. Right now, the midpoint is $328. So you'd be paying $328 to make $500. It doesn't sound like a real great deal, does it? The stuff is kind of skewed a little bit. Well, just because well, that's where it is anyway. So let's just use that market for now. All right. So if you're buying one put and selling the other, it kind of takes the guesswork out of things. And we can model this to show you that. So if I go to Analyze Trade, and I put this spread in. Okay, so if I do this spread 10 times, it's going to cost me $3,200. We'll pull up the ticket just to prove that to you. So it's going to cost $3,200, right? $3,300. And it would get you short the equivalent. So if you bought this 10 times, it would be the equivalent here of being short 42 shares of VXX, right? And it's going to decay right here $5 a day. However, if this moves down and we get below 35, you're actually going to be collecting money per day, because when you trade a put spread or a call spread, whichever option that you're closer to, right now we're 48, so we're closer to the option that we bought. So because of that, it's going to cost us money each day. If we were closer to the option we sold, then it would pay us money every day. But the good thing about this is that both options have premium in them, but they kind of cancel each other out a little bit. So this is only costing us $5 a day, which is not a whole lot. Let's take a look if we just had bought the September 40 put. Okay, so we said that was $3,300. Let's see if we buy $3,300 of September puts, what our situation is. So Sep 40 put, buy. So each one would cost $12. So we could basically buy 3 of them for the price. Okay, so if we were to just buy these puts, so it shows us having a bigger delta, and the decay is about double. Now, there's not a whole lot of decay here either, and that's just because we're far out in time. We're at 178 days out. If these options were, just a couple weeks out, and this is a great way to like check out stuff. When you're in Thinkorswim, you can just go ahead and switch the month of the options in this modeling stuff here to check out different trades. So if we just switch this to three of these puts that expire 27 March, that would be costing us $84 a day, right? So $84 a day starts to be real money. And so this is why I like doing put spreads and call spreads, because it's a way that I can understand the trade. I know how much I'm paying. I know how much I can lose, how much I can make, and where I can make it. And in this, the other nice thing about Thinkorswim is it will you can look at this graphically too. So it'll show you your risk on a chart. So here, for a 4-lot spread, this is the risk. And it shows you making money below 49 and losing money. It's a 52-49 put spread, and it shows your risk and on different dates. This Thinkorswim software is very powerful. There's a ton of resources online that teach you about it. All right, so let's go back to the chat, and I hope I didn't lose too many of you on that little explanation here. Yeah, SPY and TVIX are not inverse, and that was really proven today. When we had big down moves in the SPY, then TVIX was really responsive to it. In trading, when something is responsive to something else, we say that has a high beta. So when the market was just going limit down every day, every down day would make TVIX explode. Now that the market is moving more slowly, it's not really working anymore. And because of the fact that TVIX has moved up so much, like the higher TVIX moves, the harder it is to make it that much higher. And that's kind of what's happened here. The whole relationship has fallen apart. And that's kind of to be expected. I mean, these volatility products always end up going down in the end. If you look at TVIX over years, it eventually goes down again. So when you're buying it at high prices, you're playing with fire, and you should be aware of that. When you buy TVIX at these big prices, you're playing with fire, because it's ultimately not going to move higher. It's ultimately going to zero. And it's only a question of when. And so my rule of thumb with TVIX or UVXY, and I think you should take this to heart, hopefully you will, is I don't own these products for more than 48 hours at a time. So if you really feel like it's going to be the end of the world in the next 2 days, then purchase one of these products. But if things don't work out for you within 48 hours, get out. That is a way to stay safe. For me, who focuses entirely on the VIX and these products, I either have no position or I'm short. I don't get long them. And this is from trial and error of trying to trade these things for several years. I've learned to just not be long them. Now, of course, being long TVIX has worked amazingly in the last month, and that's what's attracting so many people to it. I'm sure there's people out there who've made a fortune. There are some people who bought it for like $40 and sold it for $500 or $800. And I know that sounds really attractive, but it's just a very rare perfect storm situation that allowed that to occur. And it's unlikely to occur very often at all. In fact, the opposite usually occurs. So, put the odds in your favor, and don't put on these long shot trades, because buying TVIX is a long shot trade. I appreciate you guys coming in. I know there's some people here just to talk about TVIX, and I know that there's some new people here. I hope it gives you some insight into it. Once again, TVIX is based on the April and May VIX futures. Both of those are down 12 points today. So even though the VIX isn't down much, and even though the S&P is down a little bit today, the collapse in volatility, and I think it's due to anticipation that this deal is going to get done with the U.S. Congress. That anticipation of volatility coming in, had a stronger effect on the market than this S&P being down today, and thus volatility collapsed in the VIX futures, down 12 points, and thus TVIX was down. So the correlation between S&P and TVIX fell apart today, and a bunch of people got burned, unfortunately. I hate seeing people losing money. Another day will come, another trade will come, and things will be better. So just hang in there. Nobody's killing him in this market, and no matter what you think, nobody knows what's going to happen, and there's no real genius out there that's just raking in money every day. It's hard for everybody. I'm sure there's like one person, but that one person got real lucky. So be grateful when you make money and realize there's an element of luck to it, and don't worry too much when you lose it. My friend Bob, he used to say, don't be too excited when you make money, and that way you won't be too bummed when you lose it. All right. Thanks for watching. Brandon. Okay, so what are we saying, Brandon? What about normal VIXY? What is the inverse of TVIX? All right, so TVIX doesn't... Well, SVXY is an inverse of TVIX, although it's not very leveraged. So TVIX is 2 times leveraged. SVXY is only 0.5 times leveraged. So you'd have to get 4 times as much SVXY to equal one portion of SVXY. I'm sorry, one portion of TVIX would equal 4 portions of SVXY. They're inverse of each other. Can you repeat that before you leave? What do you think of TVIX and UVXY positions? So, all right, so UVXY and TVIX, they're long volatility bets. Volatility has been at historic highs, and it's coming off of historic highs. So once again, if we look at the chart of the VIX, and don't worry, I don't mind answering questions about this. It's no problem at all. This is the chart of the VIX over the last 180 days, and it appears that we've peaked, at least for now, in the VIX. We're 25 points off the high right here, and thus there's pressure now pulling volatility lower. So there's pressure pulling UVXY and TVIX lower now, and part of that is due to the fact that just the market isn't moving down as fast as it was initially when this stuff first happened. Part of it is due to the fact that the U.S. government is injecting a lot of money into the market with purchasing bonds and also now corporate bonds. Part of it is due to the anticipation of a bailout by the U.S. government. But ultimately, TVIX and UVXY are down because VIX futures are down. And it doesn't appear to me like it's going to come back straight up to where it was anytime soon necessarily. I don't know what the future is, so I can't give you what's going to happen to TVIX and UVXY tomorrow. Nobody knows what's going to happen, and if somebody tells you they do know what's going to happen, they're guessing. So don't think that there's somebody out there who knows what's going to happen and they're a super smart trader and they're all set up and they know what's going to happen. There are people who make guesses based on data and that sort of thing, but my feeling for you is if you're long UVXY or TVIX, that you should not stay long either of those products for more than 48 hours at a time. If you've already been long it for more than that, my suggestion would be in the next session you do something to lighten your load. So if you own 10 shares, I would suggest selling 5. That way at least you're half out of it. You don't want to hold the bag down. I advise people, a lot of people had the same question on yesterday night, and I said, well, you might get a chance tomorrow to get out of it. It didn't really happen. It looked like we were limit down last night, but we came off of that, and it appears now that there's pressure on the VIX to move lower. And so if the trend continues, it looks now like the trend is down. We reached a peak. If I get out of the way here, we reached a peak on the VIX, and it looks like we're being pulled lower right now. Now, certainly things could turn around a little bit, but I would, if it was me that owned TVIX or UVXY right now, I would be looking to get out of it. I might not just puke out of it all at one moment, but I would be looking to, tomorrow I would probably sell half, wait around, see maybe I get lucky and we get a little pop in volatility. But there's a the U.S. Congress has this bailout package they're working on right now. It's gonna happen one way or another because the U.S. public, neither party wants to be the one. Now that they've said they're going to give $1,000 to each American, neither party wants to be the one that says, "Oh, well, we were going to give you $1,000, but the Democrats or the Republicans didn't want to do it." So they have to get some sort of deal done this week. They have to, and so that's kind of in the market. And if a deal getting done means that there's less uncertainty in the market moving forward, and it's going to tend to bring the VIX lower. So my feeling on volatility is that we've seen this big down move in the futures due to the anticipation of this deal going through. And unless, some new unknown event occurs in between now and when the deal goes through, I would look to see some sort of deal go through, and that will continue to pull volatility lower. Remember, right now, stuff has come in. We think there's going to be a deal, but until it's actually announced that the deal is done, there is uncertainty. But a deal being done, one way or another, will make this stuff go lower. It will make UVXY and TVIX go lower, at least temporarily. So use this time now to get out of some of this stuff. You might have lost some money on this, but look, this has the potential. TVIX has the potential to go down another 200 points tomorrow. It really does. So I would be careful, and I would do something tomorrow to lighten up your load. That's my opinion. It's just one guy's opinion. There's a million people out there. I'm just another person on, the internet talking about the stock market. So you can reject my opinion and move on. But for what it's worth, that's my opinion on the thing. We need more than 1,000. Come on. Clear skies. I would love to see you, be long this and it go to 2,000. That would be great. But it's the likeliness of that happening is becoming less and less right now. I'm not a fan of lottery tickets. I'm a fan of selling lottery tickets to people. And once again, Spencer with the quote, markets will remain irrationally longer than you can stay sane. Notice, by the way, that I'm picking the person who's actually bought a membership here, and I'm focusing in on them and their questions. I wonder why that is. So why did it not correlate today? Once again, the reason that TVIX did not correlate with the S&P today is because TVIX was extended. TVIX is already gone up a ton. It's not like TVIX is just in a normal situation. TVIX is already way up. It's gone from 38 to 1,000. And it's still, even at 500, it's still way up. So it takes a lot to keep it there. The only way TVIX is going to stay where it is if we keep getting down days that are limit down days. If we don't get limit down days, there's a good chance that TVIX goes lower. That's the way it's set up. It's a volatility. It's a leverage volatility ETP, and unless the volatility of the whole market is increasing, and the only way volatility of the market can really increase is if you have a huge move, like limit up, limit down. And usually limit down is more important than limit up as far as volatility. So my feeling is that it did not correlate today because there's a deal out there. There was really good news introduced by the Fed this morning, and there's a deal that's being worked on by Congress to bail stuff out. And as soon as that deal's done, people are going to step in and buy the market, and that's anticipated. If there's a 1% chance it would hit 2,000, would you take it? I mean, it depends on how much, it depends on how much you had to pay to do the 1%. I certainly wouldn't. Why would I want to bet on something that was 99% against me? I mean, I guess it depends how much you pay for it too, but I'd rather do a trade where it's like, I'm betting 1,000 and there's a 99% chance that I make 100 than betting $1. I mean, it just depends on risk reward is what I'm saying. And I'm not into long shots at all. It sounds good one day, but if you want to make a living in the stock market, you can't base your living on long shots. It just doesn't work that way. It's not worth it. All right, and like I said, I'm sorry for it's a bummer losing money, but don't feel like you're alone. It happens to every trader. Warren Buffett has had down years. So I know it's so easy to feel like there's some really smart traders out there. You go to these chat rooms and these people want you to pay them money, and it's so easy to feel like that guy that's running the chat room is like somehow this really smart guy that makes like every trade he makes him money, and he makes 200% per week or whatever. It's not true. If you were making these huge returns, you would not be running a business selling memberships. You'd be off, you'd be retired, and you'd be sitting on a beach somewhere. Just think of it rationally. These guys that are trying to sell these trading systems, usually people that sell trading systems, they failed as a trader, so now they're in the trading system business. If you're running a trading chat room, you failed as a trader, so now you're in the trading chat room business, right? I know it sounds obvious, Esteban. I'm just saying that, but for a lot of people, I think that they prey on the naive that are new to the business, these chat room places. I saw this one, and they were charging $99 a month, right, to go in the chat room. So for every 25 people you can get a new mortgage for a new house. I know you're joking, Esteban. I'm just trying to tell some of the new people about this stuff. I'm not referring to any specific group. I'm not familiar specifically with True Trading Group. I am also just skeptical of people who are telling people to go and buy TVIX. Is frustrating to me. There are people out there that can teach you about trading, and there is stuff to learn about trading. It's not just taking a shot in the dark. And there's people out there to teach you about it, but there's also a lot of free stuff about it. 50% of trading, of learning to trade, is actually getting in there and putting some money at risk and figuring it out. I was a trader on the floor in Chicago for many years. I was at the CBOE in Chicago for I think 11 years. I was in San Francisco trading for a year, and I was in the bond pit at the CBOT for a year. And I had a guy come in. He was a Stanford graduate. He came and he clerked with me in the pit, and he passed his test, got his badge, and he got out there and he kind of froze. He was like, every trade he thought of, he was like, well, I could do that, but it might lose money. I'm not sure. So, just getting out there, and you don't have to risk a ton of money either. You can get out there with an account. Maybe you have $1,000 or $2,000, and you can start to build up your experience a little bit, and that's going to help you more than anything else. For me, it was very hard learning how to deal with my emotions. I would get frustrated, or I would get upset emotionally about losing money, and it would mess me up. It took me a very long time to kind of detach myself a little bit from it. And I was fortunate in that I was trained initially as a professional trader, and but I had to work my way up too. I worked for free clerking for a guy, and got into a good trading firm. These days, to get into a good trading firm, it takes computer skills, certainly, but there's no need to go to a trading firm. You can trade from home and be successful. How much do I need to set my stop loss? Different people have different theories on this sort of thing, and it would depend on the product and whatnot. Usually, you want to look and see how much, if you're trading a product, you want to see how much it usually moves around, right? So if you have a stock that usually moves around $3 a day, you're going to set different kind of like stops and things like that than a product that only moves 20 cents a day. So it really depends. I personally don't use stop losses because I feel that I would rather just manually do everything myself. But I do if I have something that's risky on, I'm watching it all the time. I'm like, I either have my phone right by me with an alert when it gets to a certain price, or I'm watching it all the time. But I personally don't use stop losses myself. Probably some other trading video would be a better place to find out about that. Good point, Spencer. Also, can you look at the April 25 puts? Ryan, are you talking about UVXY? Yeah, wrong. There's a good article on stop losses and that sort of thing, and how to set your how to set that stuff up. I'll try to find it for you and leave it in the comments. It's by this guy named Bear Charts on StockTwits. So VXX April 25 puts. I don't think there's much likelihood that we get to 25 again in April in VXX, unfortunately. I would think that would be too aggressive of a trade. I just think that we don't get there. We could possibly get there, but I just don't think we do. I think we stay up at a higher volatility level for a while. If I was going to buy like cheap out of the money puts, I would want to move way out, like out to next January minimum. So if I was going to look at a trade to just put on and just leave, I would look out to next January and pick something like the I don't know, the Jan 30 25 put spread or something like that. When we were back down, when this was at the lows, what was the low? 13 in here. I was buying out of the money puts, but buying out of the money puts right now, the volatility of options in VXX is very, very high. If you look on the right side of my screen here, you can see the numbers 130, 125. That's very, very high levels. And so if we continue to move lower like we did today, these prices are going to come down. So you're in danger. If you buy out of the money puts, for example, in April, we're 48 right now, right? If you were to buy something like the April 33 put in VXX, April 33 put right now, it says 123 bid at 194. If you were to pay like 180 for these puts, there's a great chance that this could go down to like 41 from here, right? It could go down like $6-7 from here, and these puts could not move at all, because as this moves lower, they're going to take option prices down. The market makers know that a lot of people right now, what they're doing is they're trying to buy puts in here, right? So they jack the prices up. Once this starts to come back down to earth, they're going to take the prices way back down, because they know that people are buying puts now, and once it moves back down, people are going to want to sell those puts back out. So I would be very careful about buying actual puts that are out of the money. Did you play gold today? I lost my SUV puts. No, I actually haven't. Yeah, Ryan, I don't like it. Well, let me recommend something instead. Let me see which expiration it is. I have in the past traded gold, but I don't trade it right now. What causes TVIX to decrease in price pre-market if you hold? If you're trading TVIX, you want to be watching the April VIX futures on Thinkorswim. The symbol is VX. This is a symbol for April VIX futures on Thinkorswim. VX J20. That's April VIX futures. So this is TVIX is going to follow these futures exactly. It's based on a formula based on these futures and the next future out. So it's going to follow that exactly. So if those futures go down, they trade almost all night. If those go down, then TVIX is going to go down. It's just the way it is. All right. So you could do something like a calendar, and where you're buying one put and selling another, and that way you can finance that put. I know it's attractive to buy away out of the money put just because it's a cheap premium. You know, it's something that you can buy. You can pay $25 for something. And certainly if we get a big move down, the price of that option could go up a little bit. But you want to pick something that's like reasonably attainable. April 25 put. So it says 32 bid at 84 right now. So that's obviously a super wide market. I'm not sure what it traded at recently, but I just see these as just crumbling into dust and us never getting there. What you could do is do something like, what if you were to buy the August? Now this is going to cost a little more money, but you could do something like buy the August 20 put and sell the May 20 put against it, or we don't have May 20 puts. Sell the April. Well, I don't really want to sell that because it's only 13 cents. But you could do something like buy the May 25. What if you buy the May 31 put and sell the April 31 put against it? If you buy a calendar like this, where you're buying one put and selling the other, now you put time on your side, because every day with this trade costs you $85 to do it once. So instead of buying 3 of those puts you buy this once. Now this trade, you collect money every day while you wait for it to go lower. We'd much rather have a trade where you're collecting money every day, right? You buy this calendar spread, the April-May 31 calendar spread. It costs you $85. Most you can lose is $85. You know that, it's set in stone. So if you bought 10 of these spreads, you collect a little bit of money each day. It's not much, but you've got a delta and you're collecting each day, which I like more. Yeah, Ryan, I just feel like they don't really have a chance of getting there. I don't see volatility completely collapsing. Now, a month ago, I would have thought it was a great trade, but it seems like we're going to stay up higher here for a while. I mean, this isn't going to be over. Think about it. This crisis isn't going to be over by the end of April, I don't think. For a spread, you don't need margin for that spread. Obviously, you need to close the spread by expiration of the one option that comes off, but it should only cost you the price of how much the spread costs. But if you haven't traded calendar spreads before, I would look a little bit more into it. But essentially, what you're doing is the strike price of the option for the calendar is where you're kind of forecasting this heading towards. So 31's a decent spot to be forecasting this heading towards, right? Because right now we're up at 48. It can certainly go lower. And this kind of trade's good because essentially you're going to be short down to that 31 level. And then if it goes way lower than that, you're going to start getting long below there. So you want to make sure that it's far enough away that it's not going to go way below there. So I wouldn't want to do like the 48 calendar right now, because then if stuff goes lower, you're actually losing money as it moves away from the strike. With calendars like this, as it moves toward the strike, you're making money. If it's moving away from the strike, like if it goes through it, or if you're moving the other way from the strike, it's going to cost you money. But you're always collecting that a little bit of decay to help save you. So, Jet Fraser, they view the trade as a package. It's not just viewed as like you're selling a put. They view it as a package, because if you think about it, that put that you're buying is kind of guaranteeing the put that you sold. So you're not taking nearly as much risk as if you had just outright sold a naked put. So if you can model the margin, if you look here, it's going to show on Thinkorswim. It's going to show the BP effect when I model it. It shows how much the margin costs. So if I get out of the way here, if you look up here, this is going to show the margin for that trade, and it shows 0 margin, okay? If I were to just sell some of these April 31 puts, it would be a lot higher margin. So let me illustrate that for you here. So if I were just to sell an April 31 put, that would require $700 in margin, and down 17%, it would require $1,200 in margin. So selling a naked put is going to require a lot more margin. But if you're just buying a calendar spread, once again, since the most you can lose is what you pay for the spread, it doesn't require margin. So that's another advantage of that trade. All right, guys, thanks so much for watching. I really appreciate the support and everybody checking out the stuff. Am I recommending that we wait to short VIX at this point in time? I am short the VIX now. I'm short volatility now. I'm not making any sort of recommendation. No problem, Jet. That's why I want to be here and tell you guys stuff so that you don't have to look it up somewhere else. Fighter for Street, I don't really want to make specific recommendations for people. I want you guys to have your own ideas for stuff. I am short right now, but I've lost money being short lately. And so I'm probably not a good person to follow because I have not been doing well lately. I mean, I made money today being short, but I don't want to lead people over a cliff, and I certainly haven't been a great person to follow with my trades lately. But yeah, I'm short this stuff now. I know that UVXY and VXX and TVIX are eventually going lower no matter what. So I'm staying short them until they go lower. If it goes against for a little bit, then too bad. But I'm staying short them permanently one way or another. Right now I just have a small trade on. I've just got this. I've got the April. I bought the April 53.49 put spread. And I bought it when we were up around 62. The April 52.49 put spread. That's the only thing I have right now. I'm small. But, I lost a bunch of money being short this stuff. I was basically short all the way up from, VXX's 51. I was basically short from, 20 or something. So it hasn't been a fun ride. The only other trade I have on is I'm long DRI, Darden Restaurants right now. But like I said, my hope with this channel is just to educate people and to show them how a trader trades and thinks about stuff, and from there you can formulate your own theories and your own ideas and do your own stuff. My hope is that you would just, from watching me, you would just get the idea of that's how one guy does it, and maybe you go to some other channel or you talk to some other people and some other guy does it differently. And also, I have my own opinions on stuff like market and this and that, and they're going to be different than a lot of other traders. And I don't think that all the longs should hang out together, all the shorts should hang out together. I think that's ridiculous. You could be long one day and short another. All right. Anyways, I'm done blabbing. Thank you for watching, everybody. I really appreciate it. Check us out there is a Facebook group for questions that you can go there and you can ask questions about volatility. And there's always people there who are experts who are willing to help you. And it's not like some sort of company thing that I'm involved in. It's just professional traders from around the world are involved with the forum, and they have time to answer your questions. So check it out. There's a thing. It's free, whatever. I'm not trying to sell anybody anything, and but it would be great if you leave a comment on a video, hit subscribe. Memberships are $1.99 for YouTube. I guess I am trying to sell YouTube memberships for $1.99, but I also have Patreon. Anyways, thanks, guys. Nice to talk to you. I'll see you later. Bye.